It is still the conversation on Lagos television, and just like Abimbola said before that break, we'll be looking at the huge potentials in Nigeria's non-oil sector. We all know that the lifeline of the Nigerian economy is the income that we generate from the oil, which is essentially the backbone of the Nigerian economy. But lately, we are beginning to see signs that we can also generate sensible amount of money from the non-oil sector of the country. And the federal government had already set a target of $200 billion in the next 5 years as income that will be generated from the non-oil sector in the country. This morning, we have in the studio with us Oluseyi Odufua, Managing Director and CEO Capital Plus Management Limited, to help us look at this huge potential in the Nigeria's non-oil sector. It's our pleasure to have you.
Thank you for having me.
Okay, as at this morning when I was preparing for this program, there was a piece that I read wherein the federal government set a target of $200 billion as what will serve as income that will be generated from different sectors of the economy aside from oil. But looking at this target, it's quite huge and, of course, very ambitious on the part of the federal government. Is it realistic in the next 5 years? And what are those impediments that we are likely to face if this plan is not properly executed?
Okay, so it's very much achievable because when you set targets, you must have looked at composite indices that surrounds everything regarding that target. And I want to say that it's very achievable. And you know that we've had several conversations on different aspects of the economy before now. And each time we look at it from the view of professionalism, and we always tell which path to go. In 2023, President Bola Ahmed Tinubu made it very clear that we want to reduce our dependence on oil and gas and focus on the non-oil sector. And he made it very clear through 3-4 ministries that he set up, that marine and blue economy, Dele Alake's ministry,
Solid minerals,
trade and investment, and the Nigerian Export Promotion Commission too. This agency and ministries were directly mandated to ensure that we diversify systematically from oil to non-oil sector. And if you look at in 2025, 96% of revenue is from non-oil sector, and only about 5%, 4 to 5% is from core oil. That's not to say that oil revenues make up about 90% of our FX needs in this country. So we know that we are over-dependent on oil production or on oil and gas. We are over-dependent. And 90% is a tall order for FX revenues. You know, 96% for non-oil revenues, but they are local revenues. And you need FX revenues, mainly dollars, to be able to trade internationally. Thank you. And that's what we are trying to do now. And in 2025 alone, the economy expanded by 34%, and most of this 34% came from non-oil revenues. Particularly, if you look at the agri sector, the service sector, and I want to mention service sector mainly, about 57%. Yes, and in that service sector, we have a whole lot.
Right.
You see, if you look...
Let me quickly hold your thoughts. We would come back to the service sector, because the service sector, like you said, is quite broad.
Yes.
But we need to just a little bit of housekeeping. We'll be right back. Many thanks for staying tuned. Of course, our guest is still in the studio this morning. We're taking a look at the huge potentials in Nigeria's non-oil sector. And of course, he was explaining the service sector. Can you just break it down, some of those other sectors, subsectors that make up, the service sector? Okay,
so I was saying that the economy expanded by 35% year on year, as from January to date. And if you look at that expansion, about 60–70% can be attributed to the service sector. The service sector is about 57% of GDP, which is quite huge.
Right.
Yes, and before now it was about 50.7, 50.4% before now. So it means that there's a trajectory, upward movement of about 4 to 5%.
Right.
Yes, which is quite good. And it is now that we now know that we can solely survive without oil if we put everything in place. So it has to do with our laws. It has to do with the way we do things in terms of policy administration in the country. Now look at
But
the
the
tax
service
reform.
sector itself,
Yes.
I'm sure that a lot of Nigerians would like to know which the sectors
Yes.
that actually make up the service sector. Is that where the fintech?
Yes.
Is that where the
So for the service sector, you know, we have up to like 10 to 15
Other subsectors in there.
subsectors in
If
there.
you mention the top 5.
Okay, so finance and insurance is there.
Okay.
Trade is the highest,
Okay.
which is about 17%. Finance and insurance, about 15%. Transport is huge too, which is about 14%. Information and communication,
Okay.
where we have subsector for telecoms
Right.
under it, which is doing very well at about 7.4%. Education is there in that trajectory. Health and health is there. Then we have leisure too,
That you
which
can
is also
tourism,
there.
thereabout. Is
leisure
that where
and tourism.
fintech is also?
Yes, yes.
Okay.
So if you look at all of those, even fintech is under fintech is under communications too,
Right.
because you have fintechs, revenues, what do you call it now, for calls, to make calls, callbacks,
the e-payments,
and the SMS
right.
charges,
Okay.
and all of those, they are under the communication sector, which is a subsector too. So if you look at that as we're expanding, number one is the renewed tax laws that we just had. Those 4 components that were merged together, it shows that, you know, collections now has been, you know, simplified. You can access everything you want to access on one page and ensure that you pay your tax. So revenues from there was a master stroke. And look at agriculture too, which is not under services, but the subsector on its own. It grew by 23%, which is key too. And 4 major components of agriculture that we are looking at right now: livestock, crop production, we're looking at fisheries, and you know, for those ones, 2024, I think I said something here that those implementations, those policies will begin to take effect in 2025. And we had inflation of about 40% down to about 23 as we speak. Even though after rebasing, that's another topic for another day. So, but, you know, looking at all together in a broad view, we want to say that non-oil sector can drive the economy. And gradually, like you asked, can we meet up to that target? Is it realistic? I want to say that it's very, very realistic.
Okay.
2024, we did about $5.8 billion from non-oil in terms of imports. So in terms of exports, sorry. So in the first quarter of 2025, as we speak, we've done about $1.8 billion. About $1.8 billion, thereabout. And, you know, going forward, you know, it's that task that through the Nigerian Export Promotions Council, we believe strongly that the efforts they are putting in place now and the policies that is being run, we will meet up that target because it will continue to increase. Right. The bottom line is that let us diversify, reduce dependence on oil and gas production, not production, sorry, reduce dependence on oil and gas revenues, and let's transit into full non-oil sector. And agric, before the end of next year, agric, I tell you, should be ranking at about 35 to 38%,
Agri
which would be very good.
Agri is actually stands top
Yes.
in the sectors,
Yes.
of course, that are non-oil sector.
23% thereabout now.
So, of course, you've mentioned agri and agro-processing here
Yes.
this morning. You've also touched slightly on the service sector,
Yes.
which, of course, is encompassing of other sectors. Can we quickly look at manufacturing? Because that
Okay.
also is another subsector
Yes.
that is non-oil. Are we
Yes.
doing well in that regard when it
Okay.
comes to manufacturing, knowing considerably that power still plays a huge role, even though it feels like in the last 1 or 2 months, power has been a bit, it's been better. It's been better. We're paying more anyway. So, yes, now,
stable.
practically everybody is on band A. But the fact that you're not even
You can
running
see
your
that things are
generators, well, I don't want you to gloat. So, I'm not going to say, so let's go into manufacturing.
So, okay.
What are the prospects,
Okay.
especially for us as a country,
Yes.
in that regard?
Okay, so for manufacturing contributed about 9% to GDP. And
In terms of percentage, is that good?
no, I'll get there.
Okay.
I'll get there. About 9%. So there was a little bit of decline.
Right.
So it means that the manufacturing sector has a little bit of setback. And when you want to look at these figures, it's a composite figure that comes from previous performance.
Right.
Then you judge in the following year. And so 9% is not too good. Manufacturing should not be less than about 30%.
And we
in
have
the
9.
70s, in the 80s, it was doing far
Really
better.
well.
So, but we know that over the years, we have had systemic problems in this country. I love the way you mentioned power. Power is a major component for manufacturing.
Sure.
And that's why most of those companies, most of those production companies had to
Left.
relocate
Yes.
into other neighboring countries to manufacture. Goods manufactured in Nigeria is even more expensive. Cement, for instance, is more expensive in Nigeria than in Ghana. Yes, it's because of all the components surrounding production,
Right.
to deliver to the retail customers. And so another major aspect of it is access to finance, which is super high. As we speak now, MPR is 27.5%.
Yeah.
In the corridor of asymmetric corridor of plus 500 minus 100 basis points. So it means that lending is key. So who will fund it? It has to be government, probably through some form of cushion or some form of
Subsidy,
recalibrating.
and we don't want to hear subsidy.
No, that's what I'm trying to say. That's the language I'm trying to use. But you took it out directly. So, but, access to finance is very key. Look at operational cost for every institution. I'm sure your operational cost there too. It's not been good. It's been very high. But I love the way we all agree that in the last few months, power has been relatively stable.
Right.
So cost of production has reduced. But largely, access to power, access to finance, and bureaucratic bottlenecks.
Right.
Also in that sector or in the service sector generally is also a hindering factor. So those are the places we want to charge government, especially Ministry of Trade and Investment, to look at. Let's simplify doing business. The way we handled
Ease of doing
those tax
business.
reform bill, ease of doing. Let's simplify it so that these people this sector can come back and it begins to thrive. But we believe strongly that these are areas government is looking at. Minister for Trade and Investment, Dr. Jumoke, she spoke about it in a forum, I think about 2 weeks ago, when they were having meetings with the customs, immigrations, and the like, so that we can have a synergy and a one-stop shop for imports and also exports in the country.
Okay, let us look at the Solid Minerals Ministry.
Yes.
The ministry was able to generate about 6.9 billion
Yes.
through licensing. But then, are we really exploring the opportunities in this sector enough in such a way that we'll be able to generate more forex from the minerals that we have?
Okay, so that's a sector that is quite huge with a lot of potentials, but not delivering to enough as we speak. So the solid mineral sector is contributing about 5% to GDP. but it was less than 1% before now. So it means that most of our solid minerals, our gold, iron ore, zinc, and all of the precious metals were all pilfered away. It means that they were all stolen, even directly under our eyes. There are so many informations we have heard. You know, they bring in helicopters. Even most of the conflicts in those zones, in the northern zone, Zamfara, Adamawa, Jigawa. You know, most of those has an underlying tone of issues with mineral resources. But as we speak now, it's an industry or a sector that is reforming. Dr. Alake, first, you must put up a position where we have to look at the enabling laws around it. So, you know, amendments, looking at those laws, I think that's what he did when he came in for his first year. And as we speak now, we now know who and who we are dealing with in terms of licensing. Those Chinese companies, everybody that comes for excavation, everybody is being licensed. So we know what is coming in. So the next set will now be how to generate this income directly into government coffers. And as we speak, from 1% to about 5%. But we know that over time, because this benchmark, you know, let's not forget that this admission is just 2 years old. Just 2 years old. And as we speak, things are evolving greatly. And you'll be so shocked that no enabling laws governing some of these sectors that are non-oil. So, but the ones we really know, maybe trade, services sector, which, you know, is quite popular, and that's where most of the midstream play. But for the solid minerals, we want to believe strongly that before the end of next year, we will begin to see, you know, major contribution into GDP. But at 5% is a right step in the right direction.
But for you, in all of the sectors, a few of the sectors that we've spoken about this morning that are under the non-oil sectors, which of them to you shows the most resilience even against all odds?
I'll still talk about the service sector.
Okay.
I will still.
It seems that it is more applicable to everybody.
I believe strongly that it should be, service sector should be giving us virtually all. We have some countries in the world who are developed countries. They don't even have any mineral resources. What they work on is their service sector. Okay, so look at UK, for instance, everything is on tax. Everything is on tax. But in this case now, look at the capital market, which is also a subsector under the finance subsector in the service sector.
Right.
In the last 1 year, recapitalization alone, banking recapitalization, not even all the banks, just about 40-45% of the banks, over 4 trillion.
In that, okay.
Yes, to raise as capital, you know, adding to GDP. Now look at yield in that market. You know, last time I came, I told you yield will go up about 45% year on year, 6 months in the market. Tell me, where in the world will you get it? Even our MPR is 27.5. So, but in the capital market, yield alone was 45%. Right. So you put 100 million as a broadcaster into that sector.
Where will I find it?
Put 100 million into the market, you should be netting about 35 to 40 million.
Wow.
Yes.
Okay.
So where else can we go to, you know, to get such? Look at the insurance subsector too. New laws in the last 2 weeks. It came out in the last 2 weeks.
Right.
You know, new reforms, and that's the way to go. Our look at the tax laws. 50 years, there was no. They didn't even open the books for 50 years, and so insurance too. For like 48 years, nothing happened to those NICOM laws. But now things are changing.
So they're meeting up with today's reality.
Oh yes, that's what I'm
saying. So they're
evolving.
evolving.
The telecom sector too, things are evolving. And, you know, we now know that, you know, there's so much to begin. Look at MTN, about 27, almost about 27 million US dollars. First quarter profit. Yes, alone.
Right.
First quarter profit alone. And so, you know, as things are evolving, we believe strongly that the service sector should deliver more and should be able to take care of, to increase GDP. The agri sector too is a sleeping giant that will be awakened. Because before now, you remember in the 80s, even up to early 90s, agric sector, especially cocoa, was doing the granite pyramid, our oil palm. As we speak now, 45% of total export, income on total export, is cocoa alone, as we speak. Yes, 45% of the entire 5.8 billion is cocoa alone. And, you know, it's a sector that has not been fully harnessed. And we believe strongly that with these enabling laws and with the drive and targets Mr. President has given to this ministry, as I mentioned, including NEPC, we believe strongly that we'll end the year in brighter figures. And 2026 will be far better. So that target of over $200 billion is highly achievable. Just look at it alone. 1.8 billion in a quarter. And, you know, we don't have figures for second quarter. So we believe that this year cannot be less than about 10 billion.
Okay.
Right.
Yes.
All right. So from your narration this morning, rather, we have seen improvements in different sectors of the non-oil sector, where we are beginning to generate a significant amount of money. But then, would you say that it pays more now to do more of export than importing? That is one. And how significant would the role of the MPA be, or the maritime sector in general, in consolidating on some of the gains that we have made generating income from those commodities that are not oil?
Okay, so capital import, about 5.6 billion. That's, you know, capital import into the country in the last 1 year, 5.6 billion, which is a better trajectory to about 4.8 thereabout in 2024, still under this administration. And so when you mention MPA, you want to look at marine and blue economy, which has NIMASA, MPA, and Shippers Council and all of those. We also need to speak truth to power by admonishing the minister there, because for me, as an individual, we haven't seen too much of changes, sincerely. We haven't seen too much of changes. And that's why that sector is not contributing anything different than what they have been doing before now. And there's a lot of potentials there. Look at the leisure economy in this country. It's not something to write home about too. All our heritage sites, the waterways, that's newer too. How well can we develop it to move? We have a population of over 200 million. How well, every time we concentrate more on land transportation, and that's why transportation there is significant in GDP. It's growing well. But what of our waterways too? We only get FX for imports. So, but majorly for export, how well? Through our waterways. But the inland waterways, which is mainly for transportation of goods and services and even human traffic too, how well are we looking at it to expand what we have? There's a lot of potential there. I think about in 2024, transportation generated, I think about 43 trillion. So how well can it not double in 2025 going to 2026?
And some of the bottlenecks that we also have in our ports.
Yes, those bottlenecks too has to do with sitting down largely and putting up mechanism. Look at the seaport in the Ekpe axis. Has it solved the problems? I think the answer is no, because of bureaucratic bottlenecks, human-created ones, artificial ones. That's where we still have challenges. So, but if we can sit down, look at it well, put up mechanisms, I'm sure we can solve it. But we need to speak truth to power. For marine and blue economy, you cannot compare their growth with other sectors contributing to GDP.
Okay, there seem to be some sectors that we're not probably also looking at and seeing how much they also can be tapped into. One of them is the real estate, because that also has huge potential when it comes to what it can actually bring on the table when you're talking about growing the country's GDP. Are we looking in that direction as a country to explore the advantages that we have in the real estate sector, as well as now perhaps also renewable energy, which is also one of the new sectors that many countries are also building on as one of their non-oil sectors. So let's look at the potential in those two sectors. Are we looking into the direction of tapping into what those sectors can also bring up on the table?
Yes, real estate is not holding a backseat
At all.
As
we speak.
From about 10 trillion, real estate did 41
From 10?
trillion, yes. So in the service sector, real estate is number 3 as we speak. After the rebasing though,
Right.
41 trillion. So real estate is not sitting back at all. And those are some of the potentials we are talking about. Look at better land documentation processes now, better access to housing estates, more importantly now, better speculative ideas, and better trajectory to plan ahead. So, and coupled with high increase of population and, you know, migration from rural to urban areas is really affecting real estate positively. And so it's not taking a backseat at all. About 41 trillion. And by 2026, we want to envisage that it will be double. Because everywhere you go now, you see mini estates everywhere. It's springing up everywhere. And because of population density too, and because of siting of major industries, you know, in areas where people, like Lagos State now, the Ekpe axis contributes almost 15 to 18 trillion in terms of real estate, because of the free trade zone, because of all of Dangote's industries there.
Right,
people must live in that axis. And we also know that the new airport that is being proposed is also sited around that axis. So tell me why that axis will not see a spike. And look at recently, Lagos State government published about 41 estates, thereabout, or more, or 64, that needs to come for, you know, regularization.
Right.
And you can imagine the number of buildings in those kind of estates, or flats in those kind of estates. So real estate sector is doing very well as we speak. After the rebasing, we all now know 41 trillion is huge. And we believe that before 2026 ending, it should double that amount.
Right.
Yes, it should.
Okay, so let's look at the income that we are generating from the non-oil sector, like we have identified, especially Forex. What is the implication of all of these on the stability of our Naira and its value? Okay,
so for Forex, we are not there yet. And that's the truth. And like I said,
it's better than it used to be.
Oh, yes. About $5.6 billion US has come in. But you cannot see compared to oil revenues on FX, because that's the mainstay. That's the quick and fastest direct means to get Forex. And, you know, to show our reserve base, pay our, service our loans, you know, you need Forex to be able to do that. It's different from what we generate as a country internally that contributes to about 96%. Most of them come from taxes. So if you look at those taxes, they come in local currency. So, but you still need FX to be able to thrive. So, but that's where we are still talking about, that we need more of exports. We need more imports to come in. That guys, capital import 5.8, export about $5.6 billion, which is still a far cry to what we are looking at. So, but if we get to that level of 200 billion, then we can say we are there. But before then, we should just be optimistic. Going in this trajectory, we believe strongly that we'll get there. But right now, at about over $5 billion is still a far cry.
So, but what are those things that we need to put in place for us to meet that target?
Okay, so if we look at it, I will say, first of all, protectionism has to be put in place. When I say protectionism, I mean that indigenous companies must be protected. Yes, we must be insulated from volatilities from outside of the country. Yes, for protectionism. Under protectionism too, we must look at the issue of policies that we put from production or from accessibility to revenue within a number of days, whereby whatever we are producing, whatever we are manufacturing, must be in-house first. It must be Nigeria first, as alluded by Mr. President, that whatever we want to give out, whether procurement, whether contracts or anything, you must look at the Nigerian license first, the Nigerian company first. If we cannot get anyone, then we can outsource. So protectionism is very key. It will enable us to strengthen inwards very well before we look out there. We must also look at trade liberalization too, which is very, very important. We must look at export promotions. When I say promotions now, you know, we had AGOA before now, before its termination, or let me say, before it ended. Yes. So, but we must look at collaborations with our neighbors, African countries around us. We must look at collaborations with also the international community to be able to sustain it. And, you know, these three will drive revenue generation and it will increase employment.
So, I mean, you talked about, you know, protectionism.
Yeah, protectionism.
But then some have said that there's a need to move from that to targeted competitiveness support as against that. So when you talk about that, in terms of, I mean, just making sure that you protect your citizens and they're also able to do more business with themselves. Yes. What should the policymakers be more concerned about when you're talking about, you know, homegrown business? Like you said, Mr. President is very particular about homegrown, and, you know, protecting one another is key here. So I think one of our guests also yesterday mentioned slightly the issue of consumer protection, and again, when the traders do not have the opportunity to also inflate prices themselves. So when we talk about this, you know, issues around homegrown businesses, ensuring that, you know, we protect ourselves before others do come in, is this an issue of policymakers or an issue of we need to look out for one another first? It's
still policy formulation.
It's still about policy.
It's about policy formulation. So look at what Mr. President said. It has to be Nigeria first. The same thing Trump is doing in the US.
Right.
It is America first. So all of this tariff fluctuation, tariff war around the entire world, renegotiations and all, is America first. Because it is world economy. That America is the largest economy in the world, and they know what their worth is, and it's renegotiating. He has slammed about 15% on Nigeria.
But what are they producing?
No, it's not that.
Because at the end of, go ahead,
the mere fact that you use their denominator, you know, to do business, and that's why there's a lot of problems with the BRICS nations now. It's slamming them very seriously because they're shifting away. And once you begin to shift and align together, it's affecting their own economy too. America is growing, the US economy is growing just by about 1.8%. As we speak, the UK economy is growing at about 1.1%, very slow in growth. And Nigeria is growing at about 3%, though we projected 3.6% the last time we came about because of the tariff fluctuations, and so IMF is projecting about 3%, but we are going at currently about 3.1%.
So ours is even still
That's what I'm saying.
Higher.
That's what I'm saying. So, and you know, apart from that, what did Trump do? He said that for oil export down to the US, you know, it didn't increase tariff at all because it will affect them too.
True.
So it didn't increase tariff. So, but that's why I said that everybody should be transactionary. It should be your people first. So protectionism is very, very important for survival and for homegrown institutions so that they can be well embedded first before anything comes in. I was reading an article where I debated online about the Holland economy. I want to tell you that everything regarding to leisure, production, usually their fashion industry, it is what they produce that they wear. Even from the airport, they don't allow you to bring in clothes.
Right.
You will not. Even if the fabric is not good enough, you must wear.
Yeah.
And that's what we're talking about. So that, you know, you begin to build from within. And when you build from within, it becomes more, it might take time, but it becomes more solid. And so if we have power, access to finance, protectionism or protectionism, I tell you, we begin to grow from within. And organic growth anywhere in the world is the best growth, though it's always very slow.
You're always very slow.
So let's also talk about the tourism, which has the capacity to also make us generate a huge amount of money and also create employment and put Nigeria on the global stage. Would you say you are impressed so far with what we have witnessed in that sector?
And that's why I said that for our tourism sector, I was checking the figures, it contributes just about 4% to GDP, despite the fact that, you know, Nigeria is so blessed with natural heritage sites, natural resources, and the likes. But apart from that, when I came here some time ago, I mentioned the night economy too, which is also very important. But there are so many factors that must be put in place before you enjoy it. In the UK economy, it's about 5%. In the US economy, it's about 6% contribution to GDP. So, but in Nigeria, we don't even have it on MBS calculator to show that it produces anything to GDP. So, but the tourism sector we have a DG for, I've forgotten the name of the agency now. We have a DG there, but still we need to look at it very significantly because we know that there are so many heritage sites, but you know, presently, it's not contributing too much to GDP, but, you know, these are still potentials that we feel can grow.
Before we allow you to go, I mean, let's wrap up this conversation this way. As much as it is that we've appealed to the policymakers to do the needful, is this only the role of the federal government, or are the states also responsible for contributing to the GDP of Nigeria through the domestication of some of the things that we've spoken about here this morning?
That's a very valid point. And going back to the policies of our president, right from the one, he made it very clear that each unit, each federating unit, you know, from grassroots to the middle government, which is state to the federal, everybody has a role to play. And because of his democratic nature, independent nature, he backed it up with laws, and he also backed it up by revenue reallocation. He backed it up. And every state now is collecting about 100% more.
They have more money.
Yes, every local government is collecting about 60 to 65% more. And we are beginning to see traces too of grassroots development in some local government. Though what we have seen mostly is those from this side of the divide. Yes, what we have seen mostly. So it means that people should hold these people accountable more, most especially the state governors. They have so much. If we begin to reel out these figures, I'm telling you, people will begin to... I'm telling you, the figures are high. And in a meeting Mr. President held, I think about 3 months ago, he made it clear to them that state governors, what are you doing? Everybody still continues to focus on federal. But whereas what is available, as, like I said the last time, a local government chairman receives a minimum of about 300 to 400 million right now. Even SCDA, so about 300 to 400 million.
Some even get as much as 1 billion.
I just said the minimum.
Minimal.
The minimum.
Right.
SCDAs. That is, I'm telling you, there's no reason why there shouldn't be development. Street by street. It might not happen together, but within a span of 2 years, there's no way development should have touched everywhere. And that's what Mr. President is relying on, because there's no way you can do it alone. You need to disseminate. And he has disseminated, he has backed it up with funds, he has backed it up with enabling laws. And for states, I think they also have a very big role to play in terms of non-oil sector contribution to GDP.
All right, we'll have to leave this conversation here this morning. Thank you so much, Oluseyi Odufu, Managing Director and CEO, Capital Plus Management Limited. Thank you for always finding time to be with us on the
Thank you for
program.
having me.
Well,
Thank you.
I think our guest has justified it here this morning that the non-oil sectors, if tapped into appropriately, are able to shore up the GDP of Nigeria. And of course, this is the time to hold accountable the governors as well as the local government chairman, because they also are part of governments and they must also begin to contribute meaningfully to the GDP of Nigeria. We'll leave it on the side of the table. We'll take a quick break. When we return, Adebimpe will be here with her Lagos conversation.